Hello, everyone, short-term rental owners and investors of the Sunday River region of Maine. I'm Dave Menapace. I'm a short-term rental owner as well as a property manager up in Maine. And I'm joined here with Mr. Will VanWickler. Will, why don't you introduce yourself?
Yeah, Will Van Wickler with Keller Williams Realty, leading short-term rental agent in Maine. Also operate a couple short-term rentals myself. So today we've got some exciting stuff going on, really a state of the market update leading into Q4 of 2023. Why don't you kick it off, Dave?
Yeah, absolutely. Thanks, Will. So with that, we're going to break this into really two different topics or points of discussion. We're going to be talking about just home values and sales. And then we're also going to be talking about rental trends, management, what's getting people to book, what people are staying away from or guests are staying away from, and really talk about what you can expect in both of these areas through the rest of this year, or at least what we think you can expect in these areas through the rest of this year into next year. So Will, why don't we kick it off with I guess we'll call it real estate sales, that side of it. What have you been seeing so far? Or actually, let me take a step back. How is this year going in terms of just overall volume and sales compared to last year or the year before?
Yeah, absolutely. That's a great question, Dave. So business aside, my business aside, the state of Maine has seen a decrease of about 40% in closed volume. So the interesting thing here, and I see in my business, is my sales volume is up, units are down, and there's less inventory, which everyone across the country is seeing.
Sure.
The big thing is we have seen true seasonality, whereas years past during COVID, it really never stopped. We've seen seasonality this year where it's a slower summer. And I have to remind buyers of that and sellers that, hey, people are out on the ocean, they're out on the Cape, right? They're enjoying family vacation. They're not thinking about selling their vacation home up in Western Maine. So we see true seasonality now like we haven't seen in a couple of years, which is a good reminder. We're still chugging along, closing deals every single day and finding people great property, yet we haven't even hit the on switch yet to when
Right.
really people start to think about listing and buying real estate. So
Right.
although a lot has changed, the market is still incredibly strong. Values haven't dropped at all. They've continued to go up, which is
Right.
just a clear indicator in the strength of this market, even with interest rates hitting around 7.5%.
Totally. It's been interesting just as an observer in the space and someone who studies the market and I'd love for you to elaborate on this a little bit. There are some houses. So let's take Newry and Bethel, for example. There are some houses that seem to sit on the market forever. And then there's some that fly off the shelves. And what my observation has been is if houses need a lot of updates or need a lot of work, but they're priced as if they didn't need those things, those seem to be sitting around no matter what the price point is. And then the other ones I see that seem to be sitting are those houses that kind of inch up towards $1 million or they're over a million. Where the houses we've seen in that 650 to like 850, 900 seem to really go quite quick. Is that accurate?
1000%. People are pricing a lot of these houses as if they're turnkey when they need a lot of work. And really, that might have worked during COVID when interest rates were 2.5%. You could float a house for 6 months, but right now in this market we're in, it's game time. People need to make
Right.
money quickly because they're paying a lot in interest, right? So the numbers still work, but they don't work if you have to do a six-figure renovation project unless there's a lot of meat on the bone. And we just
Right.
closed on a great value add deal in Newry, where that investor is going to make a lot of money. There's appreciation there, but exactly right. The houses that are positioned well, clean, even if they need a little bit of work, but are priced correctly, they're going to
Right.
fly. We see a lot of the usual suspects, as I call them. I've run numbers on these houses 25 times. People reach
Yeah.
out. They just don't work at the price they're at, and the market
Right.
speaks pretty quickly. So that's
Right.
absolutely on par with what I'm seeing.
I'd also say that, over the course of COVID, 2021, 2022, even the very beginning of this year, I think people were okay buying homes that needed work, so to speak, that needed some level of renovation. I think people were okay buying them when the interest rates were low and when they weren't required to go in the office. You probably had a lot of people that were kind of like, okay, I'll do a DIY job on this. Not that that means it was done poorly. It just means people had more time to be able to spend working on their own home right? So it makes sense. But now that people have to be back in the office a lot more, they can't let a project sit over 3 months. And in fact, they have to contract it out. So it's going to cost more than it did maybe the last few years when somebody would normally do it themselves or bring in family members to help. So I think that's just an important thing for sellers to remember, is that your buyer and your buyer's needs are a little bit different, right, than they were the last few years.
1000%. That's a great way to put it. And actually, a couple of people in our group have done great DIY projects over COVID that now they probably wouldn't have the time to, talking to them. So it's an interesting trend we're seeing. Prices are still relatively strong, though. We haven't seen large fluctuations. Appreciation is still very steady in the market. So that's the interesting thing, is people are waiting for this drop in value or this crash to happen. And we're in a second home market. So even during 2008, I think there was only 1 or 2 recorded short sales, right? So people that are buying vacation homes, they have the capital to do it, even at these interest rates. And the numbers still work. We're still transacting every day.
Right. I know down in Cape Cod, I'm guessing it's similar up here, up in Sunday River. Is the other piece of this is, I think buyers are getting themselves very educated. And, let me reframe this. The buyers that are looking to do vacation rental, short-term rental, are realizing there's avenues that they can go down to get educated on how to buy smart. And I think that people are starting to realize these homes need certain attributes, right? A lot of them, I guess this is going to flow into the management side of things, on the booking side, but a lot of people are starting to recognize that even though they might be pre-approved for $1 million, spending 800 grand instead of $1 million is not a bad idea. So you can have a little bit more money in reserve, and then you can have just more money to put into the home itself to make it as nice as possible for your vacation guests, so to speak.
That's a great point. And I found the sales cycle for me has drastically decreased to maybe even down to, I think 32 days was when I last saw the metric from first intake call I do to going under contract. And it's because buyers know exactly what they want. We're able to educate them on the buy box criteria, which is clearer than ever. Before it was, we're casually looking, oh, we like this house ourselves. Now it's, we want a view, we want high ceilings, we want a place for a hot tub. The house comes up, bang, we had a call with a new investor. I had one 2 weeks ago. 1 week later, we're under contract. And it's because people have crystal clear criteria now that we're out of this COVID crazy market, where we have time to think and educate ourselves. Master on free resources like the podcast we did even. So the market's changing in that sense too. We don't quite have the same level of urgency, yet buyers are more educated than ever, which makes the purchasing decision that much easier. When the house comes up, they buy it.
Right. Let me ask you this, kind of a curveball, but a fun question. What are some sneaky areas that folks might be in the general area of, Newry, Bethel, Woodstock, Bryant Pond? What are some sort of sneaky areas or neighborhoods that folks who, maybe they don't have a budget of 800,000 or 900,000, but want to be able to buy a really strong performing STR? Are there any neighborhoods that are starting to pop up, or subdivisions that are starting to pop up, that all of a sudden what wasn't considered before is turning into is proving to become a strong rental area?
Yeah, that's a great question, Dave. So we're going to give you all the secret today. So right across the street from the lumber yard, right, that's what I have as the landmark. So in that area off Chan, like our goal, we're able to get a house from, 600 to 750. It's this.
All right, real quick, we had just a quick pause, a quick internet disruption there, but we're going to jump right back in. So, Will, you were saying, I think it cut out right after, you were saying across from the lumber yard, that would be the Bethel lumber yard, is it?
Yep. Perfect. So that's like my landmark. You drive to the left, there's the lumber yard. Right in that 1 mile stretch is a great STR pocket. So off Chandler Hill Road is a good landmark. Lots of great houses, 650 to 800, where you can get either new construction for very reasonable, chalet with some sort of view, and really just good income driver, with it being 15 minutes to the Sunday River and about 10 minutes to Mount Abram. And the second secret pocket is Greenwood and Woodstock.
Yeah.
So those buyers that are in the 550 to 650 range, which are really hard to find in Bethel and Newry, this is a great market. If you can find something with a big time view that's probably newer construction, fits the criteria in that 550 to 650 range, you can still break $100,000 a year and obtain that strong cash on cash return, as well as I think you have a large equity and appreciation perspective, because people are going to get priced out of the Newry and Bethel market and quickly realize, hey, this is 15 to 20 minutes still, and it's still syndicating on Airbnb as Bethel and Newry. Isn't that correct, Dave?
100%. 100%. No, I love it, because I do think you have to kind of look at, okay, if I'm not right in the zone, where can I be? So let's kind of like just break off and talk about some guest booking trends that I'm seeing. And the reason I'm so glad that you brought that up is there's a bit of a shift that I'm noticing this year. The shift is that, the last 2 years, everything booked up. It didn't matter if it was a weekday, a weekend. If you had a hot tub and you had a nice house, you were getting bookings. It's taking much more work than that. I'm seeing the 4-bedroom houses that sleep 12 people that are designed immaculately.
And what do you mean by designed immaculately? Let's pause there, because I'm curious on your definition.
It's a great question. So usually I'm talking about like custom or high-end furniture. That place Rustics in Bethel, right across from the lumber yard there, they actually do these custom bunk beds and couches and just like neat, really neat, trendy stuff. So spending money on your furniture, right? I think then it's making each space really interesting. Space meaning each of the rooms. So I usually say a piece of decor that's 10 inches by 12 inches, it's not even worth throwing it on the wall, right?
Yeah.
You need big sort of scenery types of decor that also flow into the colors that you're using on your quilts or duvets. If it's not a shiplap wall and it's drywall, having some level of like a mural wallpaper in each of the bedrooms, usually forest or mountains, things that would maybe come off as tacky in a primary home are not tacky in this market. And it's having that sort of immersive space so people know immediately they are on vacation. And typically the general cost I'm seeing, if somebody's going to do it themselves, usually kind of consider $5 to $7 grand per bedroom. Now, what that means is if it's a 4-bedroom home and you're going to do the design yourself and you're going to buy all these things yourself, probably budget around 20 or 30 grand for this stuff. If you're going to be hiring it out, it might be about twice as much as that. But the people that are doing this are holding almost like 70-80% occupancy in an average daily rate that's 20 to 30% higher than last year. The folks that are not doing this are really struggling right now, where they're still getting weekends booked, but they're going 4 or 5 days in between bookings with nothing, right? No matter what the price is. So I'm seeing a lot of success, both in Woodstock, Bethel, these areas that have historically been less sexy than Newry. But if you're designed really, really well and you make that investment up front, go buy a house that's $100,000 less than what you're pre-approved for. So you have the money to do this. Your return on that investment is likely going to exceed what your projections were. But if you don't do it, you're probably falling short of whatever your projections were. And I'm seeing a big divide in that. So I think that's really important. No matter which of those towns you're in, if you approach it strategically and build this into your startup cost, you absolutely will crush it. Now, what's stopping people from booking like they did last year, right? We have a few different things happening. And before I get into them, just getting into the data for a minute. So if you go on VRBO, so if you're a vacation rental owner in our Facebook group here, go on to VRBO and on the left-hand panel, there's a button called Market. I think it's Market Minder is what it's called. Click that. and then look at the trend from searches in the area compared to last year.
Mm.
It's down to about 30 to 35% of what it was last year. That is not specific to this market, though. That is literally across the country in almost every market that I'm seeing. So how are some people making a lot more than last year? They're making these investments to make it a really trendy, newer feel type of home. A couple other amenities that people that are now just becoming the norm or the expectation is, obviously, we've said it before on these calls, but it's the hot tub. That's one of the number one search things. Air conditioning. You know what I mean? People are just, if it's the summer, people are passing over any house that does not have air conditioning. And I, unfortunately, as a manager, can't stand there with a sign on Airbnb and VRBO saying, don't worry, it doesn't get that hot here, right? It's just, you have about a second to capture somebody. And if they're already putting that filter on, it's lost. So just a couple things that I'm noticing in the area. A couple other trends that I think are important to note is the much bigger homes, the ones that are going to sleep 14, 16, 18 people. While they're still booking, I am not seeing as many weekday bookings in the summer as I did last year. And I think this is where we're coming back to some of the seasonality that we saw, back in 2019. I guess was really 2019, 2020 is really sort of the last time we saw this. A lot of the reason for that, it's not that these big houses are making less money. I'll tell you the strategy to capitalize on these houses in a moment. But where a 3 or 4 bedroom home that sleeps 8 to 12 people might get to enjoy 80% occupancy, if they're assuming they're designed really well, these bigger ones, the expectation right now really should be closer to 40 or 50% occupancy at this time in the summer. So how do you still make as much money as last year? Well, this is where you're going to use your tools in Airbnb and VRBO, and there's a few others like Price Labs and a few other tools like that, to mark up your weekend days. Try and push for 3-day weekends if possible, but switch that down when you're about 2 or 3 weeks out. If a weekend isn't booked, switch that down to a 2-night minimum. And again, inch that price up. So essentially your ADR, your average daily rate, is going to be 20 or 30% higher than last year, but your occupancy might be 20 or 30% lower on these big houses in the summer, and that is okay. You know what I mean? At the end of the day, you're still making the same amount of money. In some ways, it might be better because your house is getting less wear and tear. And the other interesting thing from last year, the reason this strategy works, and I think people should really give it a shot, is last year, the average lead time for a booking was something crazy. It was 2 to 5 months ahead of when people were actually going on vacation. Right now, it's 1 to 14 days. So I'm not even, so what have I done? I've totally gotten rid of last minute booking discounts because it's now normal behavior to have a last minute booking. Within 1 week, though, I will lower the price. So a family of 6 or a family of 5 might be able to go enjoy that house that can sleep 15 at a price that is reasonable. If it's not going to end up getting booked that week, and it'll usually come in 3 or 4 days before the actual vacation is about to start. And then after that, I keep the prices really high still. So the other thing is, for the winter bookings, I've started making really high minimums at this point in time, anywhere from 3 nights during the week to 5 nights over the weekend. And we're about 40% higher on the nightly rate than we were last year. So if people want to snag those times or snag those dates, they absolutely can. But I know that it's not normal right now to book a vacation that far in advance. So I'm not going to start dropping prices just to get my winter filled up. So I think these are all just really important things for owners and for operators to consider in this market and really any market that you're in.
So Dave, tell me this, somebody's looking to buy or they're just analyzing the market. Do you still think it's wise to utilize numbers from last year? What I'm hearing is revenue is likely going to be the same, maybe a little bit higher. Just the times you're getting that revenue will look a little different. Instead of 80% occupancy on a massive house, you might see 50 and still exceed that revenue projection. Is that correct?
Yeah, the composition of how the revenue is created is a little bit
Hmm.
different for this specific market. But I have no problem running revenue projections off of last year. Usually I'm going to pick a house that's in the 60th to 70th percentile for revenue
Hmm.
just to play it conservative. Um, and once again, you can really start looking at the 80th and 90th percentiles from last year if you have the startup funds to do the right things on designing the space. Another thing that I'm starting to see a big divide in, there are a lot of masterminds and there's a lot of different coaching programs. I'm noticing that the owners that are paying for adequate education in this space are seeing a huge ROI on that investment in education and how they operate their business. Two things seem to happen. A, they get to enjoy spending less time managing their property because they
Right.
learn how to create the right systems. And B, they are making significantly more money than folks that are kind of doing this off to the side, just trying it out. And again, it all depends on what your goals are and how serious you want to take it. But for us, we've always wanted to make money on our own properties that we own in Cape Cod and Maine.
So let me ask you this, just looking at my notes, things that come up every day for me, what are you seeing? People every single day, we're analyzing property on the sales side, and people are sending me listings and trying to compare them with large property management firms or houses that they say, well, this is the same looking house, but it's totally empty. Doom and gloom, the market's falling. Dave, what's the reason that a lot of these properties that maybe had 80% occupancy last year now are totally open with the large managers? Is it a change
Yeah.
in the market or is it a change in the manager strategy?
I think that I think it's actually not a change in the manager strategy, and that's the
Hmm.
problem.
Okay. Yep.
And I do think that a lot of these larger firms, they've been around for 10, 20, 30 years, right? And they kind of look at their income and their homes as going up and down just like the economy.
Hmm.
There is a way to combat that though, right? And it goes back to the education piece, right? If you're on the cutting edge of what is happening in the industry and leveraging different and new technology to bring to your portfolio and deploy across it to drive bookings, those are the sort of boutique managers that are absolutely crushing it right now. The bigger ones, and again, it all depends. I am one of those smaller boutique firms, so this is now sort of speaking as somebody that has a manager, or somebody else is managing their property for them. Um, it's all about understanding how your manager makes their living, right? And a
Hmm.
lot of the existing short-term rental management companies, not all of them, but some of them, um,
And I'd
their
say
model
across the country is what we'll
across the
say
country.
too.
Yeah,
Yeah.
this is not specific to our market. Their model is similar to a long-term rental management firm, which is based on the volume of houses they manage, right? um, there is another methodology and strategy. And the other methodology and strategy is figuring out how to make your existing portfolio more money in as a way of boosting your own income as a management firm or as a co-host or whatever. Um, I think that a couple of things, right? Understanding every day and every month what the guests are looking for in a house and looking for out of their stay, right? Whether it's going to now be normal for a 2 or 3 night stay, or whether it's going to be normal to go back to a 5 or 7 night stay. That's really important to understand. Usually, if you can get more shorter stays at a higher nightly rate, you're going to make more money. But just understanding what those booking patterns are and really staying on top of that, understanding what your target guest can withstand from a pricing perspective, and then understanding exactly which amenities your guests are looking for when booking a home. A couple, you kind of did your secret areas, your secret sort of sub markets. A
Right.
couple amenities that I'm starting to suggest to people to stay ahead of the sort of curve and actually thinking to summer of next year. adding things like a really, really cool swing set, right?
Mm.
That's gonna promote families coming in, and making it like a cool sort of playground area. Guarantee they're gonna stay a few extra nights because their kids are really gonna enjoy that, right? And
So
so
what
it's
I'm hearing is you're thinking of the guest avatar, right? It's who the
guest
heck is
avatar.
actually booking this house.
Yes,
Right.
exactly. And why are they booking it? What are they going to do when they're there? What can get them to stay an extra night so they might spend an extra $800 to $1,200 outside of the winter that at some level takes care of itself because of the activities in the area like Sunday River. So I just think those are all really, really important. And I think if somebody's looking for a manager, you really need to vet them and ask them what their model is for management, what how they treat each home, what what kind of trends they're seeing and how are they reacting to those trends and how are they advising in a consultative way to their owners to stay ahead of sort of the competition, so to speak.
So this is not planned, and I'm going to throw this at you.
Yeah.
And you could do the same to me. Somebody is struggling in this market where they're not doing as well as they want. What are 3 actionable items that they can do today to boost their revenue and occupancy going into the winter?
Yeah. Well, let's run with the assumption that they do have some capital to make some updates. Because if they
Yep.
don't, that might be challenging.
Yeah.
But the very first thing I would do is I would hop on AirDNA, I would or STR Insights, either one, and I'd see what the top properties are. This is just a starting point, right? And I'd take a look at all those amenities of the top performing properties and check off which of those you have, which of those you don't have. The next thing I do, and I'm making the assumption somebody doesn't have a ton of capital to invest. I would go through the entire amenities list in Airbnb and VRBO, and I would start buying every single thing on that list that costs less than $50.
Yeah. Iron, hair dryer.
Outlet covers,
Right.
mosquito net, mini fridge, like a million of these different little things. And then I would just start tracking using a tool called Rank Breeze where I'm even ranked because you need to diagnose the problem before you start fixing things. But I would do those things and start seeing, am I on page one? And this is going to start getting technical, but we track our conversion rate on every single property. So it's great if I got 50,000 views, but if my conversion is 0.01% when the norm is 0.15, all right, I got to start getting some cooler stuff in my house, right?
Mm.
So I always go back to what amenities are you providing and what kind of guest do you want to be there? And are you meeting the guest where they're at for what their needs are? I mean, that's always going to be my recommendation to somebody. And we've said a million times what the top amenities are, but just making sure you're providing those things and it all makes sense for the guests that are booking. If you don't have the money to do those things, then you really just have to make a personal decision on it if this is a game that you want to play right now or not.
Right. It's less of shooting fish in a barrel where the people that are really hurting, it sounds like they just got in, they had a house in ski country. Now it's all right, this is a business and it's not easy. It's even having a long-term rental. It's not easy.
Right.
It's not just passive income, right? So really getting purposeful around the
Yeah,
guest avatar and what we're offering because we're in hospitality at the end of the
we
day,
are.
right?
We are. And it is a business. And yeah, so I think those are the things that are really, really important to understand. And then leveling your expectations, right? Now with a house in this time of year, a house that sleeps more than 12 people thoughtfully, I'm sort of
Mm.
expecting a lower occupancy because it takes a lot of coordination and usually one person has to foot the bill and that's really expensive. Fine. We're still getting every weekend booked. I'm just going to raise the nightly rate for those weekend nights and it's going to be fine. So that's usually my response to that.
I love it. What I would tell somebody, they were in this market ready to pull the trigger, 3 things you would do, get really clear, end in mind, what's your real goal? And is it
Yeah.
even obtainable in this market? So a lot of people, they say, hey, I want a 35% cash on cash return. I do too. And if we find that, I'll buy it.
Yeah.
Even Bill Faith, Mike Shogren, right? People in the industry are saying if you can hit 15%, What's the stock market doing? What's your bank account doing? That's really good. And we're not saying to buy a bad deal. Be realistic with your expectations and also have that goal in mind. Have a clear
Totally.
buy box is number two. So know what you're going to buy. So when it comes up, it fits. And then understand your guest avatar, right? Do you
Yeah.
want to deal with really low end, maybe some college people, or do you want that high end luxury guest or the family? So who are you? What would you want to do? And where would you stay? So it's three really quick items that I
Yes.
want to throw out when acquiring property instead of just coming at it from the investor side where it's numbers only. We're in
Right.
hospitality. Everything I'm hearing from you, Dave, is just really humanize the process and bring it back to why, we all got into this, which is we wanted a free vacation, right?
Right.
So
Let me ask you this, looking out, so it's August 10th when we're recording this now, looking out through the rest of this, I'll kind of just say between now and call it April 1st of next year,
mm,
what sort of trends, if you had a crystal ball and you could see into the future, what would you kind of expect from a sales perspective, sales cycle, and all those sorts of things in your world?
that's a great question. The crystal ball is foggy. It's foggier than ever right now. Very unpredictable market leading to election too, which is going to be interesting. I don't see the market changing drastically. I don't see values dropping. I think inventory is still going to be not where we want it to be. However, it'll certainly pick up and transactions will continue to pick up. And the biggest expectation I have is relying more on new construction than ever. So people willing to furnish a house start to finish with a brand new build versus maybe buying something and partially furnishing it. So that is my market outlook is new construction is going to be more prevalent than ever to combat the low inventory and lower resale that we're seeing. On the
Right.
flip side, I think the players that are hurting right now because they just bought a short-term rental didn't do anything, they're going to start to hurt and they might start to sell, which creates a lot of opportunity for good operators to come in and pick up those houses, not necessarily at a discount, however, get themselves into the market. I think the big
Totally.
thing I see is anyone who buys in the next 1 to 3 years is really going to be thankful once we're 7 to 10 down the line. This market historically doubles every 10, right? So
Right.
just get in the market. And if you can make a good purchase today, I'm of the assumption it can only get better. So that's really the
Totally.
market outlook. Not a ton changing. However, best just to get in the game.
Totally. From I guess booking and operator manager perspective, we've touched on it a little bit. The one thing I'll tell people is if you are buying right now, the last few years the strategy was take some quick photos with your phone and get that bad boy up and
Right.
listed so you can start taking bookings maybe 1 month or 6 weeks or 2 months into the future. I don't like that strategy anymore. I like waiting till the home is completely settled and ready and the professional photos are in and you have your absolute best foot forward first
Right.
off the bat. Because that booking window is so short, you're really not missing out on any bookings. And the folks that do that, take that approach now, I'm seeing having drastically different and better results than those that rush to get their property listed as they're still getting it ready. I'm seeing a much quicker ramp up period for the ones that are just boom, ready to go. And all the focus is just put into the house, get it ready, and then launch it. And I think that perspective or that strategy really should be focused in on and is probably here to stay for like at least the next year or so. As we sort of get through, the summer's coming to a close. I do expect most weekends to still get booked at all the properties, all the nice properties anyways in the
Mm.
area. um Especially if you continue to make updates and thoughtful changes to your house to make it interesting and pop up on the first page of Airbnb. I think that as usual, Thanksgiving week is going to be a premium. Usually you want to mark your prices there about 50% higher than you normally would in the fall season. Christmas to New Year's, obviously that one usually I'm doubling prices. So if you're normally charging 400, I'd suggest charging 800. Or if you're normally charging 1,000, I'd go 21, 2,200 for the time being, and I'd put a 3 or 4 night minimum in that time frame, It's okay if it's not one person staying the entire time. It's totally fine if you have 2 or 3 rounds of guests in that break. Just make sure your prices are high enough. One thing I'd suggest to people too in allowing shorter minimum night stays is a lot of people come to us and ask, they'll try and book a 6 or 7 day vacation, and then they'll ask, can we get a discount? And I say, sure. The way you can get that is by booking a shorter night stay. Every time, instead of booking 5 nights, they'll book 4, and we're still at that premium rate, and so guests asking for discounts, guests asking for early check-ins and late checkouts, that is becoming very normal in this market. I'm seeing it over and over and over again. Don't be scared to give that stuff to a guest, because that could be the guest that brings 10 other people on their next round and their next round. I think that Q1 will be super strong. Seeing all the precipitation we've had this year, it's rained almost literally every other, it feels like every other day up there. That has, by the way, affected bookings for what it's worth, just because people are doing their last minute bookings, and if they see rain on the forecast, they might decide not to go to that region or that area. So I do want to caveat a slowdown in bookings. I do think that is part of it. Hopefully it stays cold enough where that turns into a ton of snow this year. And I think that the winter will be just fine. Just don't be unrealistic. And also in the winter, don't be scared to do a 1 night minimum. If you have 2 bookings with a 1 night gap, double the price or even triple it on that 1 night. Money is really tight for people right now. And they might be totally fine with going skiing on a Tuesday, crashing Tuesday night, and skiing on Wednesday, and then heading back home. Don't let that be a missed opportunity, because you might be able to see 20 to 30% more revenue by doing that. We've been doing it in Cape Cod this summer, and our owners have been psyched with how much money you can make on that. And if you price it high enough, people are not coming to party. And the other thing to note is that Airbnb will not let somebody book if their home address is like within a certain mileage of the home. So that off the bat is going to get rid of parties. The other thing is everyone should be starting to deploy a strategy on collecting email addresses, not through Airbnb and VRBO, but from every single guest that stays at the property. We do that with a technology called StayFi. It plugs right into the internet router. And so it's an access point. All guests have to put their email addresses in order to get access to the Wi-Fi. Then we will now email them the welcome guide, right? So they can see what's in the area, give them a little value add. And then we'll email them one more time after they check out with the direct booking site. If you trust a guest, no harm in having them book direct on one of those 1 night stays in the winter, and then you can start to remarket for the next summer. I think it's really important that everyone starts to have a strategy for how they're going to get off Airbnb and VRBO, or at least balance the scales. Because one thing that is coming down the pipeline, and this is a little secret for the industry, but Airbnb later this year, early next year, is going to start deploying paid rankings where people can pay to get ranked higher. And that is going to shake up a lot of things in the industry. And it's really unfortunate and disappointing. But there's also, so what happens when we build our house on somebody else's land, right? So everyone should have a strategy for that and leverage it. And these are some of the things you get when you get, you start to learn when you get educated in the space. So I think there's a lot happening that's not just applicable to this market, but other markets around the country, really every market. But I think having a plan in place, knowing that you really need to be strategic if you want to hit the revenue numbers that you were hoping for, but know it is achievable and you can still beat last year's numbers by doing a lot of these things.
I love it.
Sweet.
So we're in a great market, and that's the beauty, right? We have great snowmaking. We're in Maine. People will always come here. New market, new strategy. So
yeah, I absolutely love it. Super bullish on the market. I love it. Like Will was saying, talk to Will about some of these different subdivisions and neighborhoods for buying. I mean, we're seeing a sneaky cool market in Woodstock right now. And the last piece about that, just for what it's worth, is guests like it because it's about 20 minutes closer to Boston. And some of the, anyone that's coming up the coastline, it's a bit closer. It's also a little bit closer to the casino and some things happening that way. Or if folks want to use it as, that house as their hub for their vacation. It's not as far from Portland, Maine, and a few other places. So talk to Will about that. And yeah, I guess it's time for us to sign off, huh?
Yeah. If anybody ever needs anything, happy to help them out and continue asking questions.
Sweet deal. Will, what's your email? Just so people can reach you.
Yeah, wvanwickler, kw.com. You can look me up on Instagram, book a free call, link in my bio. And Dave, how are people finding you these days? You're
Yeah,
everywhere.
pretty much everywhere, but people can shoot me a DM on Facebook. You can send me an email, dave@5strcohost.com, or our website, www.5strcohost.com. Even if you don't need a manager and you just want to talk about different ways that we can help you, feel free to reach out.
Awesome. All right. Happy hosting, everybody. Right.
Till next time.
See ya.